Well, hello everyone. Don Garman here, yet again, June 2024, back again for another monthly check-in. And again, I'm not going to make it too long or exhaustive or too dramatic about some of the events that have gone on in the markets. It's pretty clear the last several weeks, uh, since we hit beautiful all-time highs across the board. Um, there's been some chop in the markets, which some of you have noticed, and certainly I think not to be unexpected at this time of year seasonally, as we got through the last earnings season, and now we're less than a month before the next earnings season. So we always get more and more nervous and some throwing some mixed signals kind of in that doldrums between seasons. And there are certainly some things in the economy that have raised some eyebrows and caught some people's attention. There appears to be a general slowing of the economy. So that causes people to wonder, if it slows too much, what are the implications of that? Or if it slows and inflation doesn't also slow at the rate that we are hoping and expecting back toward that 2% number, then that conjures up some boogeymen of the past that creates some nervousness around prices. Volatility has risen a little bit, but also we have to note some other things that really haven't changed. For the people that have been, clearly in the camp that 10-year treasuries were going much higher, the truth is the yield on the 10-year treasury is right where it was October of 2022, which is it's hard to imagine, but this is the first time. Now, again, it was a lot more stark in the 6 months preceding October of 2022 in terms of the path of increase, and we've been above it certain periods and below it for a couple periods, and certainly recently, some of the slowing that has been witnessed has caused the yield to come down quite a bit. I'm going to go back to the beacon that I tend to revert back to a lot to try to pick up, true signal rather than just noise. It has to do with this earnings chart, and I'm going to put it up. And when we talked, even in this video 2 months ago, I was talking about $242, and I remember one time I talked about $240 in reference to the S&P 500 earnings for 2024. What you would notice on the chart, if you pay a little bit of attention to it, is obviously it's sloping upward. The earnings estimates are sloping upward. And this would be the time of year when it would be sloping downward pretty meaningfully if the expectations for future earnings were starting to fall meaningfully and lower. And you can see the line on that chart on the left side where the line is moving down rapidly. That's that 2022 market action that was so unpleasant. My point in not making too much of this moment is that it's generally not going to be a challenge for markets on a broad level, broad scale, if interest rates aren't rising rapidly or if earning expectations aren't falling rapidly. If neither of those two things are present, then we're going to have volatility and we're going to have chop, and every day is not going to be up for sure. But we're still within a good day or two away from new highs yet again. So I would just say, as people are seeming to do, go out and enjoy the sunshine, and hopefully you are enjoying some time with family. We're now in the 1 month or so, yes, 1 month, less than 1 month to 4th of July. And then hopefully everyone will get to spend some time with loved ones over the next few weeks. So I will check in again if need be before then. And if not, I will be checking in real close to that, probably before the 4th of July holiday, and wishing everybody well then as well. But in advance of that, have a great one. And we're here if you need us. And thanks for everything. We will do some more educational type stuff probably in the fall. And for those of you who have enjoyed those, we'll have some more of those coming up, and maybe some new people to introduce as well. So until then, talk to y'all soon. Thanks. Bye.